Shares of Amazon are down almost 50% this year. They've lost all of their pandemic-fueled gains, falling back to where the stock was trading before COVID-19 started shutting down the U.S. economy. The stock slump caught the attention of the man sitting to my left, Brian Sozzi, and that's where we find his feet.
That's all I do, just track stock moves all day. But this was actually starting to get pretty startling. I have a story on the Yahoo Finance homepage with some more numbers detailing the sell-off. But let's go through this Amazon stock price by the numbers first. Year to date, Amazon stock is now down 50% year to date. That is a huge move for an industry leader and dare I say pioneer like an Amazon. The stock is trading at a 52-week low. That was hit yesterday before coming into today's session and is the second worst FANG performer year to date. Of course, that is Facebook / Meta, Apple, Amazon, Netflix, and Google. The worst performer, I believe, is Netflix. So really a startling year here for Amazon. Now, looking around what Wall Street is saying, we're starting to see some more bearish notes come in on Amazon right smack in the middle of the holiday season. First up, friend of the show, Mark Mahaney, earlier this week, he said he's lowering his estimates and his price target on Amazon in the wake of some analysis that he did, saying there's ongoing softness in online retail and cloud computing demand. So that's Mark over there. On the other side, you have my former boss, Jim Cramer, tweeting to me this morning that he's actually buying Amazon stock here on those 52-week lows. So there you see Jim's tweet to me this morning. Interesting to see him making those moves. Now let's break down why the stock is in fact, I would say, tanking. You have a weak holiday season. We saw weak retail sales hit last week. The market did not like that. You've seen a couple retail warnings, and the read is that perhaps even Amazon, even though it is a leader in retail, of course, it might be coming under pressure this holiday season. Recession fears, of course, hurting consumer spending, but also the spending by enterprises and perhaps how much they will spend on cloud services. And then maybe, and Julie, I'll toss this up to you guys, Julie and Brad, maybe some loss of confidence in CEO Andy Jassy here. He hasn't really had, I think, that big, amazing quarter since taking over, and that's a big red flag.
Well, it's a tough cloud environment for them to continue to sell into their existing clients and then get net new clients as well. So you look at the compression in the cloud and the number of net new customers that they're going to be able to sign on, or either make sure that they retain the existing amount of customers that they do have and the seats, the licenses therein. That's one issue. The consumer discretionary issue that we've continued to talk about, and the number of people that are still willing to buy within any retail category, knowing that they're tightening their own dollars that are going out the door. That's going to be a different issue, because that's a line of the business that is not necessarily just the profit margin winner for them. If anything, it's web services and advertising, which, what else is a red flag? The number of companies pulling back on their advertising dollars that they're spending even into a high conversion environment like Amazon too.
Right on. And to that end, fire the take here on Amazon, which has been a challenging year. Amazon is still Amazon, but ... And by that I mean Amazon is still a leader, of course, in cloud services and retail, advertising. It does so many things right, but the market is not giving you the trade. And at this point, I think you're going to see a lot of analysts simply call Amazon a show-me stock going into next year. By that, I mean they have to show you a good quarter. They have to come out here and finally beat earnings, finally beat on sales, and not come out here and warn that their costs are out of line.
Grinch has had a lot of
play
this quarter.
A lot of play.
Yeah.
Grinch is just chilling.
I think it's pretty straightforward. I think you had a pull-forward effect, a re-rating of the stock. Mm-hmm. Amazon's not going anywhere. It's just growing slower. Yep. That's. I mean, it's pretty straightforward.
Well said.
I think.